a good day on Wall Street. The Dow rising more than 200 points. Investors, they're optimistic that Greece can make a debt deal that'll prevent it from running out of cash altogether. But Greece may not be the world's biggest financial headache as we speak. China starting to look shaky. Its major stock index rebounded yesterday and today, but it's still lost close to a third of its total value. And that would be like the Dow, for example, crashing more than 5,000 points. But don't do a victory lap yet here, because China could still be on the ropes. Sure, it is our biggest economic competitor, but if China's economy collapses, the ripple effect, it could be huge. We're talking about $10 trillion economy here, the second biggest in the world, and more than 40 times that of Greece. Now, if China slides, we will feel it here, and the question is not by how much, but by the quantity of it. A short time ago, I spoke to Dan Bases about Greece, China, and more. He is a senior correspondent covering global financial markets for Reuters. Dan, you've been pretty busy, I'd imagine, over the last few weeks here. And let's hop around the globe really briefly, starting in Europe, where what would have been, I think, not only the lead story, but the fear of the contagion about the calamity of Greece. While not mitigated, there does seem to be a potential light at the end of the tunnel. First, talk about the greater risk to Europe and more about how there may be a deal in place that can be worked out with the EU.
Thanks, Richard. Good to be with you. The situation in Greece, it's waxes and wanes. So at the moment, we seem to be waxing. We seem to be leading towards some kind of agreement. We'll find out over the weekend. The importance of Greece to the European economy is not in numbers, it's in psychology. So whereas the Greek economy is a very small percentage of the overall economic output, psychologically, any exit of Greece from Europe would be a blow. It would say the European project has failed in some respect. So it's really a psychological issue more than an economic one. It's really a political issue more than an economic one at this point.
You think it's more likely that there is a deal at the end of the day, or do you think it's more likely that a Spain or an Italy or a Portugal follow suit?
No, I think my assumption is up until it happens, they are in the EU. There will be a deal. There will be some pulling back of both sides. This has always been an issue of brinksmanship. For instance, just to give you an anecdote, I interviewed the foreign minister of Greece a month or two ago. And he basically said, we're playing a game of chicken here, but it's not the game of chicken that Europe may understand. We don't have anything left in the tank. The car is essentially in the middle of the road here, and we're out of gas. So either you do a deal with us, or what are you going to do? You're going to deal with a new government. You're going to deal with a Golden Dawn, which is the far right in the country. And he basically, it's calling Europe's bluff at the end of the day.
Let's go to China now and try and put in context for those who say, oh, the only other economic superpower out there, a pox on them. The worse their markets is, the better for us. But they've lost a third of their market. And I'm hearing people draw comparisons to how the U.S. was in the 20s leading up to the crash of 29. Put in context from your perspective, just what's going on over there and the potential risk to the global economy if things continue to go south.
Okay, look, China's had tremendous growth. Its stock market was up 150-odd% up until this point. It dropped 30%. Now it's rallied in the last 2 days because of government measures that they've taken and the strong arming of the brokerage industry and such to either have companies just halt trading, or they'll have a margin-financed facility that basically backed by the central bank to feed cash into the Chinese market. So you have to understand, in the U.S., stocks represent maybe 30% of household wealth. In China, it's 10%. Yes, this is devastating. Yes, there's been tremendous capital destruction. But when you look at it upon a broader scale, the impact will be perhaps more limited. Now, that said, where are we going to see impacts globally? Well, certainly in the United States, we're a bit insulated from it to a degree. We have a trade deficit with them. For instance, we sell them more things like agricultural products or transportation products and waste and scrap, whereas we buy a lot of technology, computers, electronics, things of that nature. So it's the metal, mining, and restaurant stocks in the United States that could see a hit. But by and large, the U.S. economy is doing rather well.
Well, Dan, I certainly appreciate a few minutes. You have a great weekend for yourself. Thank you so much for joining us.
Thank you. You too.
Up next, our Hudson Valley headlines.